Let's get you updated on our ag trade as we get toward the midday session here. I wanted to take a look at this canola market for you today. And in the canola trade, of course, this is traded in Canadian currency. So you have the May contract now $1 higher, and that would be priced at $467.60 per metric ton. And you have that July contract $1.50 higher in Canadian money at $475.50 per metric ton. Now, moving on to our grain trade today, we'll start out with the corn. Here we go. We have the corn, which was under a little pressure early, now starting to get a little bit of a lift under it. Look at this. May now 2.5 higher at 383 3/4, showing a little more strength than some analysts had earlier given it credit for. We have the July now $0.015 higher. September back to unchanged, and December, after being down a couple of pennies, is now only up one tick lower at 384 1/4. Couple of cents off its earlier low. Now moving on to the soybean trade. What's it doing? It's also trading higher, but this is about where it's been much of the morning. We have the May contract 4 1/4 higher at 907 3/4. July 3.5 higher. September up 2.5 cents. November's up a couple. In the wheat market right now, you have your Chicago May down 6 at 521 1/4, but the silver lining is it's off of its earlier lows this morning by a few cents. On the Kansas City market, we have that May contract now trading 4.5 lower at 453 3/4. And Minneapolis wheat on the May contract, it's currently trading lower as well. We're down about, we'll call it 4 cents at 530 1/4. July down about 3. And let's go right to the trading floor in Chicago and find out from the source what is going on. And here we have Scott Gecas of the Fox Group. He joins us right now. Okay, Scott, starting to see things elevate just a little bit off their earlier lows this morning. What does that mean to you?
A lot of people are really happy about it. The rate cut was definitely a big factor in that. When you're looking at the soybean market, the crush, the U.S. crush was at record highs. So that's also a good thing. That could bring down the ending stocks quite a bit. So we have to wait and see how those numbers are going to be playing out. But all in all, I mean, over the last few days, I mean, things are definitely shaping up in a positive tone. And you can definitely see that with the market reaction to the upside. You know, I will tell you that the upside calls in pretty much every market are holding a heavy skew. $2 skew in soybeans, about $1.25 in a corn. Even in the wheat market, there's still a little upside premium delivered in the upside calls. So, you know, that just means that there's a lot more movement to the upside once we get this coronavirus figured out. I mean, it's still a big factor whether or not it's going to spread or what the media is going to start reporting. You know, if we start getting more and more cases in the States, you're going to see a lot of downside pressure in pretty much every market, as we have seen in the past.
And it didn't hurt matters any that we had an overnight sale reported by USDA this morning right before we opened up our daytime trade. So things are starting to shake loose, and it was a sale to China. I just wanted to point out it was 110,000 tons of grain sorghum that was sold to China, and it was for the old crop marketing year. So it will be for fairly immediate delivery. That's the case. They are huge buyers of milo or sorghum from time to time. Maybe things starting to come loose a little bit here as far as their demand for purchasing U.S. products. Everybody's been waiting. Maybe that's a start. We'll have to wait and see. Welcome back, Scott, and we'll take a look at our cattle and hog market activity as well here on a Wednesday. We're talking with Scott Gecas, and we'll be right back. On the live cattle market, we are hanging on to gains today. Let's take a look, shall we, on the live cattle futures in Chicago. April up by 90 cents now. We're at 111 per hundredweight. We have June 72 cents higher at 104.10. And it's fairly consistent across the board. Remember how we had a lot of spread trading being a key feature here in recent days. Not so much today. It's kind of spread out all over the place here fairly evenly. Now, if you look at the feeder cattle market today, you now have March up $1.03. We have April up $1.13 at 134.90. So all the contracts all across the board on the feeder cattle market are at least $1 higher, if not a little more. If you move on to the lean hog market, here's how we're stacking up. We have the April up just a nickel at 63.60, and now May, now it's up 78 cents at 70.40, and the June contract 47 higher at 78.55. So it seems like the entire ag complex here, Scott, is starting to really kind of lift a little bit. Is this related to the move that we had seen earlier in the stock market this morning, where it started to rally?
Yeah, I think so. I think, I mean, everything, all these markets have been completely beat up for, the last few days. So I think this is more of just a relief, just getting a little bit of upside pressure to the upside, a little bit of upside, see if this momentum is going to continue on. But, I mean, with the protein complex in particular, you have a lot of backup concerns. If the restaurants are going to slow, travel's going to slow, it's all due to this virus. So if we get more virus headlines, which it looks like we're going to start seeing sometime soon, it really depends on how that's going to be affected. But if once you see these virus headlines come across, you're going to see knee-jerk reactions come all the way back down. It really depends on how you want to look at it. Some analysts say it's an overreaction. Some analysts are saying it's an underreaction. So you're getting both sides of the coin. It's just a matter of which way are you going to be on, and can you actually be on the right side. So until we get some kind of clarity of what is really going on with this virus, I think it's a flip of the coin when you're looking at the meat complex, up or down. So just because any headline can just draw fear concerns with more backup, restaurants and as well as travel being slowing down. So then you're running into supply concerns, and if we get an overabundance of supply, then we expect prices to be depressed a little bit. So it's just all due to what is going to be reacted to the headlines coming out in the near future.
One thing about it, and I haven't really heard anybody talking about this yet, but if I recall, a year ago at this time, thinking back then, we had the long extended cold spring that was wet and cold for an extended period of time, and nobody could grill, remember, until almost summertime. And that seems to be a little different now. I know Tim Ross was talking on the weather maps there, where it's really going to be warming up in parts of the U.S. Spring is kind of on the way it looks, and grilling season cannot be that far away now.
Let's hope so. I know I'm looking forward to it, so let's hope it continues.
Absolutely. All right. Well, I'm in there with you on that, and I've already bought some stuff up. I'm chomping at the bit to get going on that. Thank you, Scott, for the time. I appreciate it. We'll talk with you again soon. Scott Gecas is with the Fox Group. He's there in Chicago. So, yes.
I'm not counting, but you had mentioned grilling season twice already this morning.
Can you tell where my mind is?
I can tell where your mind is. You're
Love
getting itchy.
grill.
Well, Michigan Farm Bureau's premier